Hello everyone, I'm Shekhar from Momentum Lab. Today is 1st of November 2024, so I'll be doing a monthly review of October. Now in this monthly review, I usually check three things. One, how the markets are faring in general. Second, which sectors or stocks are moving up. And thirdly, I'll also see the portfolio of mine, how is it doing well. So this is just a reflection or introspection of my own process that I do every month, and I'd like to share this as a vlog in public. None of this is an investment advice because I'm not an RIA or a RA. It is only for education and learning purpose. So let's begin the video. So let's start by looking at the overall market at global level. I'll take two international indices, one Nasdaq and the other is Hang Seng. Two commodities, gold and silver. One Indian market, Nifty 50, and one debt. For debt, I choose ABSL, Aditya Birla Sun Life's debt fund. Now, among the six indices, if you take a look at last 1 year performance, the returns were phenomenal. Every asset class did really well. But in the last 1 month, we see that the Indian markets and the Chinese markets have started to correct. The commodities are continuing their bull run. Nasdaq is flat. Debt anyhow is standard and static. So we see that there is shift or change in gears, especially in the equities of Indian and the Chinese markets. Now let's see if this shift is a temporary pause or a start of a deeper correction. Now, before we do that, let's also take a look at the other market caps in the Indian market and also the sectors within the Indian market. Now, if you see the sectors, Nifty Next 50 had even more pronounced fall of 9.5%. The rest, Nifty 200 and Nifty 500, the larger market cap index, they fell in the similar range of Nifty 50, that is between 6 to 6.5%, 6.5%. Now, if you take a look at the sectors, almost all sectors ended in red. Um, Nifty PSU Bank was a saving grace. It fell only by minus 0.5%. This had a pretty bad last 6 months. It fell by minus 7%. Now it seems like it is undergoing some consolidation after deep fall. Then if you take a look at the worst performers, energy, consumption, MNC, auto, and even FMCG. These 4 or 5 indices have fell by 10%. Now, if you take a look at the other indices which have done decently well, when I say decently well, which have corrected lesser than the Nifty 50 index, they are one, as we have seen, PSU Bank. Even the pharma also did well. Financial services also did recently well. These are the only three saving grace in terms of correcting to a lesser extent than the overall market indices. Now, that's about the bigger picture. If someone is interested to see the details of which stocks are doing really well and which stocks are showing relative strength, you can take a look at this sheet. So what I try to do here is I take the last 1 year, 9 months, 6 months, and 3 month returns of each stock and compare it with Nifty 50. That is, I divide the returns of Nifty 50 for the respective time periods and I calculate a metric. And I call that metric as the final score, which is similar to what Market Smith does. And this basically tells you higher the score, especially if the score is above 80%, then it means that that particular stock is overperforming or doing better than the Nifty 50. So this way, it will be a good place for you to hunt down some good trading ideas. Now, for this snapshot, again, the similar way I do, I take today's date and I subtract 180 days to get the 6 month returns, minus 365 days to get 1 year returns, and minus 31 days to get 1 month return. So this way, I'll be able to see the last 12 months, 6 month, and 1 month returns. So this will basically tell me the trend of how is the movement happening over a period of time. Now, this market snapshot is a top-down approach of knowing what is happening in the market in a quick glance. Now, you can also do the similar thing by taking a look at the bottoms-up approach. That is by looking at the stocks, and then from stocks again, you can think about or go about seeing some patterns of which kind of stocks are able to buck the trend or which stocks are falling too rapidly, and then maybe come up with the sectors which are doing good or doing bad. So either way you can choose, but whatever be the way that you choose, this market snapshot is a really helpful tool. The link for this tool is in the description. If you take a look at the markets, so what I'll do is I'll open the trading view and we'll see the markets one by one. Now I'll open first with Nifty 50. Again, I'll cover all the market caps in the Indian market. We'll start with the Nifty 50, the large cap index. So the Nifty 50 chart, the first thing that we observe is the black color line and the red color line. The black color line is the 100-day exponential moving average, and the red colored one is 200-day EMA. Now we have crossed the black colored line after a long time, and we have stayed there. That is most important. We did cross the 100-day EMA during the election results, but we quickly bounced back the next trading session. Whereas that is not the case now. We have gone below it, and we have stayed below it, the 100-day EMA, for a couple of days, in fact, for an entire week. And we did rally up, and we again took a uh, resistance at the 100-day EMA. So the 100-day EMA now is acting as a resistance. That is a first bearish signal that I would call. The second is we are below the 100-day EMA. And third is, right now, if you see, you can also observe a head and shoulders kind of a pattern, where this is the left shoulder, this is the head, and we are waiting the right shoulder. This you cannot term it as the right shoulder, because the head and shoulder pattern happens at the neckline. This is the neckline where you take the support. So there's the first support and second support. So we are anticipating this. We don't know how this will pan out. If it retraces well way beyond the shoulder, then that is something interesting to watch out. And it might mean that we have bucked the downward trend, and we have resumed the. We cannot say we have resumed the uptrend. Maybe we have started to consolidate, at least in this range. But if we find sharp resistance at these levels, then we can expect that to be the next alarm or danger bell. And finally, the confirmation is when we break down from this neckline. So that's the overall picture looking like. We have seen that more evidences are pointing towards either a correction or a consolidation. The final nail in the coffin is the market breadth. So market breadth is defined as the percentage of stocks which are above a particular EMA. Now, for this case, I usually take 200-day EMA as a good barometer. If more than 50% of stocks are above the 200-day EMA, then I say the market breadth is good. If more than 50% of stocks are below the 200-day EMA, then the market breadth is worsening or weakening. Now, to take a suitable universe, I'll take the entire Nifty total market, that is NSE 750 stocks. Among the 750 stocks, we'll plot and see how many of these stocks are above the 200-day EMA, what percentage of them. Now, let me quickly show the code that I run. This is the Python code. This again is available in the description link. You can check on that. So you see that I've plotted the market breadth since 2015, Jan 1st. And initially when I plotted, the starting value is 0 because we have started from that downwards. But take a look from these values onwards, when from 1st Jan 2015, we have close to 9 years of data, 2015 to 2024, 9 years of data. And you see that whenever we correct or we come and touch the mid 50% level from the top, we do not quickly go back and bounce. In fact, we do a deeper correction and we stay for a longer period of time before even moving up. So this was the case first between 2015 to 2016. This was for the second case during 2018 to 2020s. This was the case during 2022 and 2023. You might notice an exception in 2017, where we were above the 50% line. We came down and we quickly resumed back. But let me give you a caveat that uh, I'll show you what happened in 2017. Let's go to weekly chart. Then it will be even clear. Now, since we are on a weekly chart, now we'll have to reduce the number of time period. Now, instead of 100 and 200, let me go back to 20 and 40, because each week has 5 trading days. So 20 basically means 100 day, and 40 means 200 day. Now, so that's the chart. If you see what has happened during 2017, so we have seen that in 2015, we were crisscrossing the 50% line in market breadth multiple times. And we have gone below 50%, way below during 2016. And we bounced back mid 2016. So let's see what happened between 2015 to 2016. So as you can see, 2015 to 2016, we were in a downward channel. And this bottoming out is this. And after that, we resumed uptrend. You can see the market breadth improved. And the market breadth considerably improved. After that, we saw this fall in the market breadth during 2017, which I was referring to, where we came below the 50% line and we quickly bounced back. That coincides with this. Now, the difference between this correction and this correction is that this is not the starting of the correction. This is the final stages of correction. Because one big correction already happened, and second, in the second leg of correction. So you can think of it as the VCP kind of a pattern where one correction had happened and then the volatility further shrunk and then made a move. So this was in the final stages of correction. Whereas in here, we are not in the final stage. In fact, we're in the first stage of correction. We do not have any precedence of correction happening here. So that is the difference between the current drop in the market breadth versus the 2017. And in fact, this drop more or less resembles to the earlier corrections where we saw the market breadth fall from above 50% line to below 50% line, like in 2015. And what happened in 2018? Let's quickly see what happened in 2018. So in 2018, we were in a sideways market. The markets did not move much. Actually, if you notice from the 2018 Jan 26th till 2020 November, we were in a sideways market. These were a bad times for momentum. In fact, this is also a bad time for momentum. But this is also extremely bad because in a sideways market, you always get fall signals. You get in, get out, and lose a lot of money because of churn and opportunity cost, missing the opportunity. Whereas in this, maybe at least you have some, if you have a trigger to get out of the market based on the trend, then you may at least sit in cash for some period of time. Now, this was also pretty bad stay 2018 to 2020. And this lasted for 2 years. The same is with this correction also from 2015 till 2017, 2 years. And you can see the same thing happened between 2018 to 2020. The market breadth was below the 50%. Only in the late 2020s did the market breadth improved. Once it improved, it stayed well above the 50% line, the market breadth from 2020 mid till 2022 start. So this was the entire period. So let's see the other patterns that we can find. The first thing is that the correction usually lasts for 2 to 2.5 years. So that's what was observed between 2015 to 2017, 2018 to 2020 mid, and again 2022 to 2023. So that's the way the corrections have panned out in the last 10 years. Now, if you take a look at the other market caps also, they also exhibit a similar kind of a pattern. Let me quickly show the weekly pattern. This is a Nifty 200. Same way, just like Nifty 50, it is now resting at its neckline and below its 100-day EMA. And this is Nifty Junior, same, resting at neckline below 100-day EMA. Same with mid cap, below 100-day EMA and resting at its neckline. Small cap and micro cap are showing some reversal, strong reversal, in fact. If you notice the green colored candle, strong close, and they've closed above the 100-day EMA and they've taken a solid support at this neckline, small cap and micro cap. This is something interesting to watch out for because usually whenever the correction happens, these are the first market caps which fall rapidly. But they are now holding. Let's see what is in store for next couple of weeks because we don't anticipate anything. We just react to what has happened in the market and take cues from it. If you take a look at the daily chart also, you can see that in daily chart as well, unlike the big market caps which have corrected heavily, the micro caps have had a very good closing last week, taking support at the neckline. Same is the case with small cap. So let's see what is the picture that is present. And if you take a look at the commodities, I think the better way to visualize the commodities is by looking at the line charts. Let me open it in a weekly time frame and you'll see. So you see that all the equity are heading downwards. Nifty 200, Junior, Nifty mid cap, small cap, and micro cap are showing some kind of resilience, whereas gold is in a proper uptrend. And if you also see the silver is also in uptrend. So the commodities are bucking the trend. They are in a proper bull trend after the correction that has happened. And so that's what the overall markets indicate, that there is some kind of pause in the equity. The commodities are continuing their uptrend. And if you take a look at the stocks specifically in my portfolio, Only few stocks stand out. The rest of them are not doing that great. If actually you run the screener as on today, then half of the stocks in my portfolio will not even be there because most of them have breached the 100-day EMA. Now, since I don't do rebalance every now and then, I only do rebalance on 15th. So I don't check what is the status of their stocks, whether they are in the screener or not. I only check on 15th. So let's see on 15th how many stocks remain and how many stocks move out. As far as I'm concerned, I don't change anything because the backtesting has been done over the last 20 years, and whatever rules that we follow, we have taken those rules into consideration while doing backtesting, and we've seen that the results are satisfactory in the Nifty 20 universe. So I'll be continuing to do this momentum, even though they might move in a sideward or a downward fashion. And if the market goes into correction, then automatically most of the stocks will not even enter into my filtration criteria because the absolute trend itself will remove a lot of stocks. The absolute filtration criteria is the stock should be above 100-day EMA, and the 100-day above should be 200-day EMA, and the stock should have made at least 6.5% move in the last 1 year, and the stock should be within 25% from its 52-week high. Now, these three are itself to sieve or distinguish between stocks which are in uptrend or momentum or stocks which are not in momentum. Now, with the stocks which are in the momentum or uptrend, among them, again, I'll calculate the ranks based on past 6 month and 12 month and figure out which are the top ones. So that is a process that I follow. This automatically takes care of the non-performing stocks, and there's no cash call as such that I take. I just continue to execute the strategy blindly and will continue to execute, however bad the results might be. So that's it about the markets. Now let's take a look at the stocks which are doing well. So what I'll do is I'll show the stocks which are still holding or doing good or showing some kind of strength. Now, for me to demonstrate that, I'll switch back to 100-day and 200-day EMA and show you guys which stocks are still above these lines. None of this is recommendation. It is just purely for educational knowledge purposes. So OFSS is good. Solar Industries is below 100 EMA, not good. Kalyan Jewelers is good. Motherson is not good. Zomato not good. Suzlon no. Trend is good. CG Power is below 100 EMA. Vedanta Limited is holding above 100 EMA still. Dixon is good. Prestige not good. Siemens, Cummins not good. Siemens actually has bucked the trend and is above 100 EMA as of now. M&M is not good. BSC is, yes, pretty good. So these are the stocks that are in my portfolio and how are they performing. And if you take a look at the stocks in the overall market which are doing well, and which are coming into my filtration, if at all, if someone is rebalancing on today, because most people usually do it on first of every month. So if you are running this scanner, then most probably you might be encountering these stocks. Let me show the kind of stocks here. So I ran the code today morning. So what I'm seeing is just like I've shown in the market snapshot, that a lot of IT names, pharma, banking, financial services, these sectors names are starting to crop up. Let me go one by one. So with respect to banks, I see Indian Bank, then I see Federal Bank, and these are the two banks that I see. And if I look at the financial services, I see HDFC Life, HDFC AMC, Muthoot Financial, Federal Bank I've already covered. Then I see Paytm, ICICI Prudential, Max Financial Services, Bajaj Holding, Shriram Finance. These are the finance sector stocks. And Policy Bazaar, maybe you can consider it as IT or financial. These are the ones which are doing well. And again, we see pharma also doing good. In pharma, we have Mankind, we have Alchem, Sun Pharma, and then Max Health, though it is not pharma, but related to healthcare sector. And then we have Divi's Lab, Lupin, which are doing well. So on expected lines, because these are the defensive sectors. But financials is something interesting because financials was not doing for last 3-4 years. Now it is starting to show up in the momentum list. So waiting for the 15th of this month to see which stocks would be there in the list. And I hope that most of my stocks which are there do not go back and correct. Right now, none of my stocks are below the. I've not exited any of these stocks so far in the last 15 days because none of them have breached the 25% all-time high criteria. So earlier I used to have 20% as the criteria. Now I've relaxed it to 25% because I have sufficient capital, and I mean capital when I say I have sufficient leg room to take some risk, because if you remember, my portfolio went up to 21%. So that way, most of my stocks did well, and then since they moved to 21%, the 25% level from the all-time highs was still at a smaller loss level of 40K. Like, if I show my sheet or portfolio, it becomes clear. So in the worst case loss, which I calculate, is at minus 40K. This it this is when I exit all the stocks when they hit their 20, when they fall by 25% from its all-time high. So this is the uh, scenario right now, that none of the stocks are closer to 25% except for solar industries, which is at minus 23.4. So we'll have to check out what happens the coming week. And rest of them are pretty okay. In fact, the orange colored ones are between 20 to 25, which are Prestige and Suzlon. The yellow colored ones are between minus 15 to minus 20, and the rest are in white. White is in like a safe buffer zone. They are way close to the all-time highs than at minus 25% level. So this is the overall portfolio right now. The NAV stands at 6.93, or the net profit is at 7%. So in between, we had touched all-time high of 21%, and now we came back to 7%, whereas the Nifty 200 is now at 9.5, 9.4%. So we are right now at a negative alpha territory of minus 2.5. So this has been the journey so far of the NAV. The blue colored line is my strategy, and the red colored line is the Nifty 200. In the last couple of weeks, we have been in a flat market. If you see the red color line or the blue color line, from July, that is July, August, September, and October, 4 months, we have been in a flat trend. And as you're aware, flat trend is not good for momentum strategy. So a lot of crisscross will happen, and churn will happen unnecessarily. So with all of this, we are still at minus 2.5. Let's see how the coming months shape up. And if we see the trajectory of the alpha, let me zoom in a bit. I'll zoom it to 150%. So September month looked good. We were on the track to close down the alpha, bring it to zero levels, and try to uh, overpower the Nifty 200. In fact, we did do that during October first week and second week. And after second week of October, the correction started to happen. And now again, we are back in the negative alpha territory, and now at minus 2.5. And the drawdowns, we see that we are right now at a drawdown of minus 12%. We saw these levels earlier also during election results and budget. This is the drawdown levels at minus 12%. In the worst case, if everything goes down and we exit all the stocks, the max drawdown will never go beyond 20%. So that's how the uh, strategy has been formulated, so that we don't lose too much of money and we always stay in the market. That's it about the portfolio with respect to the DIY momentum strategy. This strategy I'm running on the Nifty 200 universe, and I've been thinking to expand this universe, as I said last time also, but I'm waiting. Let's see when is the right time to move to Nifty 500. Now, if I take a look at the factor strategy that I'm running, this factor strategy is pretty simple. I just take the average, that is, I take 50% in momentum, 50% in low ball, and I do a regular sip, weekly sip on Zerodha. So by doing this, I'm tracking closely with the Nifty 50 and seeing whether I'm able to beat the Nifty 50 index or not. Now, so far we have completed 60 days, I think, in this strategy, and we are neck and neck with the Nifty 50 by running this strategy. We are not doing great, not we're doing any worse. We're just doing as good as Nifty 50 at this point of time. So let's see how this also goes, and I'll keep you guys updated on the results. So that is it about the monthly performance, and we got a couple of responses from the backtesting hackathon, and I'll be happy to share the results and present a detailed video, more than the results in terms of how much they make, what is the kind of returns, CAGR, etc. What is the logic? What is the strategy behind it? What was the rationale behind it? And especially the enthusiasm of the viewers to do some backtesting on their own come up with some of the insights and share it with us. That means really a lot to us, and really thankful to the members who have shared their backtesting strategies with us. And I'll be doing a detailed video explaining these backtesting strategies and sharing with you guys their workings also. And if possible, put it in a blog so you guys can read. And if it is interesting, you may try to follow them as well. So thanks a lot, guys. Have a nice day. Bye, and happy Diwali. Stay safe.